All right, I'm just gonna be going over, what happened in the market today and the opportunities that avail themselves. All right. First thing to mention, all right. So the market basically broke down and had followed through into this prior accumulation area, which is where the support was there. So that's where the bounce occurred. And the bounce, basically all it did was test the breakdown. That breakdown was right here on this brick that that took out this low. What's interesting about this brick is that you see the wick. That wick is really important because it showed that whenever you have wicks like that, it shows that the buyers tried to go higher, but they failed. What does that mean? Stuck longs. Where are the stuck longs? One second. You see these wicks? So it basically went to support, and then the longs tried, and they failed. That's what the wick represents. It's failure. It's an attempt to go higher that fails, but it needs to be at a particular level. So where longs will enter. They'll basically enter at support levels, and that's what they do. They enter at support levels. So they tried and they failed. Then what happened was, again, the market, they tried again at this support, right at the low. They tried again. So what does this wick mean? Like I said, it means they failed. So they did attempt, but at support level to buy, but the buying failed. So you have stuck longs here. And instead, it was a breakdown with follow through. Very, very, very important that there was follow through. All right. It was a breakdown with follow through to secondary support, which is right here. And from here, there was actually a trade bounce. And that's what happened. Why? Because, that's what longs do. It's a no-brainer now that this is where they buy, they buy at support, and you can tell by the volume, you can tell by the reversal. Look at this. This is 15. This is the biggest volume in 68 bricks. Obviously, they're buying at support, right? And all it does, it goes to resistance, and here is the breakdown. So it's the test of the breakdown, and these stuck longs here. So what do you think they're going to do? You said they're going to try to break even by getting out of their position, and you got it, because that's what happens. Longs enter the market, they either succeed or they don't. If they don't, they're stuck. Price goes back to that area, they get out break even. As they get out break even, sellers come in. Why? Because that was the prior area where selling basically defeated the buyers. How do you know? The wick, as I just explained. That wick, it was an attempt to go higher that failed. So they're stuck here. Where does price go? Goes to the wick. What do longs do? They get out. What do the shorts do? They come in again. New shorts come in again at a test of the breakdown area. And that, along with the stuck longs, causes what you call an imbalance. Basically, more sellers than buyers. And that initiates the down move. So, that's what happened. All right, so we're going to take a look at two turning points. The first is here. And the second one is at the accumulation low right here where it bounced. Okay, the second thing I want to say is that whatever you do, do not just buy and sell signals. If you don't understand and you just try to buy and sell signals, it never works. You could try any signals. Why? Because how price goes from one level to another level, it goes from one level to another level, but how it goes there, how it trends there is always different. There are millions, literally millions of combinations because of the varying degrees of pullbacks, because it's never just, oh yeah, higher, 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 low, higher, 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 low. Whoever made that diagram is just an oversimplification. How it gets from one place to another is never higher, 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 low. Very rarely, I should say, is very higher, 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 low, because there's springs involved, shakeouts involved, momentum, straight up. So all of that's involved. So whenever you see a signal, it doesn't mean shit. What you need to do is combine it with some intelligence, support and resistance levels, trend, be ready well in advance, and then you know where the buyers are stuck, sellers are stuck, and where the new shorts should enter, and all of that entire game. So anytime you see a signal, it is totally, totally random. It is your judgment that makes the signal less random and more likely to work. All right. Anyway, so let's take a look at the breakdown and see how that occurred. So the breakdown, you had, maybe I'll go over the test of the accumulation area and then go over the breakdown. All right, so on the lower time frame, what happened? Market went to this accumulation area. Where's the accumulation area? Where it says ACM, that's accumulation. That's where some buying activity came and it had all followed through. So that's the second level of support. The first was over here, it failed. The second level of support. At that second level of support, the first thing to mention is you had a change of behavior. The biggest wave in 33 waves. Does a change of behavior by itself mean anything? It doesn't mean anything. Remember, signals are random. They could be caused by short covering. They could be caused by a lot of things. The turning point is a series of steps. It is not just one wave. It requires rally, pullback, testing, blah, blah, blah. So you have this change of behavior. In fact, preliminary buying actually came in over here. All right. So because you can see that there was a support level, and the preliminary buying came over there. So I did a video on what makes a change of behavior work, and all of that. It's not just a big wave. If it was a big wave, it would be the easiest thing in the world. And all those guys looking for the COCH, what is that? The change of character. They would know what makes it work, but there's pullbacks and low volume and all of that needs to be taken into account. And right here, you see that change of behavior on 18,000. The pullback here is on 13,000. What does that mean? Too much volume. It's not going to work. Later on, though, 3, 5, here 14, but then 1 and 1. What is it saying? It's saying the sellers have dried up. All right. So it's remember, it has to be at that level where there was prior buying. That's also another thing I want to mention. What you're trying to do overall is say, okay, where are areas where there were prior buyers? And then ask the question or answer the question, are they still there? So they're still there, and now are the sellers gone? And right here you have evidence that the sellers are out. So some overnight action. You can't really do jack, but with overnight action. But off this low, they come in and bang. All of that happens, right? If you just look at this in isolation and say, oh, what is this, a bear signal? What is this? But if you take a look at it in terms of context, and what is context? Context is just where there was prior buying and selling. That's it. You want to call it a level, whatever. Doesn't matter. All right. So over here, come in and they rally. All right. Now I know that this, it was just a matter of time until they did this. So that's what happens. Before I analyze this turning point, understand this. In a counter trend, your change of behavior is likely to get swept. Again, I'll say this. In a counter trend, your change of behavior or change of character is very likely to get swept. And there are more springs and upthrust in counter trend because that's just the way it is. Right? I mean, it's just something you'll see over and over again, and you'll realize, oh shit, do not just buy pullbacks after the change of behavior. So where do you see this sweep? You see it right here. What the hell happened? Oh yeah, right. I'm losing the mouse right here. There's the sweep. So that sweep or that spring of the change of behavior happens a lot in counter trend, and that is actually an indication that, oh yeah, we are definitely in and out counter trend. And it, for me at least, like, you know that this is just going to set up the bounce and you can short it. So that's what's going on here. Yes, there's some accumulation, blah blah blah, but there's a lot of overnight action. So then eventually it goes up here. Why is this area important? Why? Because this is the area of the breakdown, and now it's testing the breakdown. It gives the appearance of strength. This is why you never use one chart and you never trade with just the lower time frame. You need to put it in context, and you see that all that did was test the breakdown. From that, you have this move right here. And remember, this is with trend. So when you have moves with trend, they don't sweep the change of behavior as much. This is with a downtrend. So I mean, they don't sweep the. So here is your change of behavior. Here is your pullback. Now, I wouldn't take this. I know it worked and all that, but I'm not too crazy about it. Why? Because I need lower volume on the pullbacks. As you know, I use a rule. What is the rule? The change of behavior to the pullback volume should be a 3-to-1, meaning the low volume on the pullback should be 1/3 or less, preferably 1/4. Not just 1/3, but 1/4. The minimum is 1/3. So if you have 18K, the pullback should be like 6K. It's not. All right. And then you have the down move. How did you know when it came here to sell? You only know it from the Renko or a higher time frame chart that this is the breakdown area and that this is just a test. So, I mean, if you want to see something cool, all right, watch this. Go here. Now, it's going to profile the 9. You don't want the 9. You want to see it within the breakdown area. So boom, boom, right there. Exact tap. Right there. And the selling with the lower low. Right there. This, I cannot tell you how much this increases the probability of this working. You have the level, you have high volume, breaks, all of that there. Why? Because the sellers are still there. And this is the first test. So the likelihood of this working is extremely high. And then it goes to shit, as you can see over here. All right. All right. I'm done with this. So let's go to the next. For the ES, we see that there was some distribution up here and then a breakdown, right, on the Renko. So you had a breakdown, had follow through. What do you expect? The test of the breakdown. Why? Because price is attracted to volume. That is why price is attracted to breakdown. It is not attracted to breakdown just because it's a breakdown. It's because of this fundamental principle of price attracted to volume. Why is it attracted to volume? Because the whole purpose of a market is to generate volume or activity. all right, and volume equals money. So this is the area with a lot of money. That's where volume is money, and it's going to go from areas where there's no money or no trade to areas where there's money, and that is where you expect selling pressure to come in because they were already there. They're already there. Question is, are they still there? All right. So here, right here, you have the selling pressure come in, breaks the low, has followed through, and then you have 1 and then 2, which is a test. Okay, it's going to come off this area. Why? Because there's a breakout there. So I would expect, you see that the first breakout, the higher breakout was here, it only did 1 brick. Then it failed. These are stuck longs. All right, you see this green brick? It's a stuck long. That's a stuck long. You know, they bought the Tesla breakout, but it failed, and now it's going to the secondary area to test. It comes up, what happens? Again, you're testing the breakout and letting the, going to that longs. This green brick is longs. And what are they going to do? They're going to exit. Why? Because they are underwater. Why? What happens next? Sellers come in. Those who are defending the break, new sellers come in, and existing sellers who are defending the breakout add to it, leading to what? A change of behavior right here, and it's going to go down, and that's what happens. All right, I like the fact that this, you know, it's 174 and the pullback is on 69. I want less volume, and the less volume actually comes later on, 69 and 26K, and then eventually initiates markdown. Markdown bars right there. And then it goes down. All right. So this is how. I mean, basically tested the breakdown, or that stuck long, that distribution area. All of that is just within one area, and then from that you got to change your behavior, or change your character, or sign of weakness, whatever suits your fancy, and then it basically puked. So how would you trade this? You just wait until it tests, selling pressure is in, biggest move in 12 waves, makes the lower high after that. After the lower high, on the reversal, sell. And what happens? It goes down. It's a very good idea to wait for the lower high because a lot of folks, they just don't understand what they're doing. And they'll just see a big wave and sell halfway back, because they think Wyckoff says sell halfway back, but there's a lot of preliminary steps to that. It's not just buy halfway back, sell halfway back after a change of behavior. That won't work, because you don't know if it's a change of behavior. The trend, because change of behavior is trying to break trend. Trend is very, very powerful. All right, why? Because in a trend, you always have someone who's ready to trade the pullback. So it's not easy to break a trend. It's far easier to buy a dip and for the trend to continue. So you're betting that the change of behavior changes the trend, and you need to see clear distribution. Is there distribution? If you look closely, as it goes to that area, you have all those stuck longs selling, but there's a small clue here. These bars, 1, 2, 3, 4, and this green bar here, that's a big bar, it gets taken out. That's one clue. Second clue, I think it's a lower close, not a lower low. I'm not sure if it made a lower low, but it's a lower close, meaning you have this white wave becoming a red wave. That is the second clue. Final thing is, when it comes back up, what do you see? Weakness. It's going sideways like that with little bars. Demand is gone. Demand is spent. And sellers come in and turn the market. All right. This usually happens. Why? Because there's lack of progress in the close and all of that. And that also is true on a minor scale, as you can see here. So this basically... Now I'm looking for, this market is pretty screwed. Like you see here, they also failed. I'm not sure where the test is going to be, but damn, this 5 right here, that's the biggest, and 6 is not really that big, but there is selling pressure here in the 3 and here in the 5. 5, as I explained, what does this wick represent? If you are following along, you know these are stuck longs. Why are they stuck? Because they were trying to hold the lows. See these lows? These lows right here. You know, buyers and sellers advise support resistance, right? This is evidence. They try to buy, you see the wick, and look what happened, go all the way down. So they're stuck here. So if market goes down and pullbacks to this area, what do you think is going to happen? They're going to try to exit. And new sellers will come in, and the existing sellers who defeated the buyers, take the market down, will attempt to defend their position. So buyers will not have an easy time trying to hold this area. So we're going to take a look at this area to see if, you know, if sellers can do anything. If buyers can do anything, or if sellers just overtake them right here. So that's what I'm going to be looking for tomorrow. Anyway, and then the next, if they get above that, you can see the volume up here. Remember, volume is important. Why? Volume is money. It's not just, oh, you know, this trade, a lot of activity. No, the volume is money. And the approach, Wyckoff's approach, was always to follow the big money or smart money. Big money is really identified by big volume. Big money equals big volume. Volume is important because it's a representation of money. That money was used to establish or accumulate a position or distribute. And that's all it is. So those areas are important because the big money or smart money has established their positions there. And it is also where the sellers have overtaken the buyers, or vice versa, requiring big money. So anyway, have a good night. Bye.